Hi there. In this video, we are going to look into PYTH and we'll see where the bulls and bears are battling around, whether there are any traps that's going to trap us, as well as whether there are any whales footprints. These are education content only, not financial advice. So let's start with the daily chart of PYTH. Here, we're seeing an uptrend continuation, and over here, there was a fake, you can say a blue trap, just a force or fake breakout. It's still, the bulls and bears are still battling around this, trying to push through this resistance line of 6 cents. Okay, it is still within this uptrend channel. I would say there is a possibility that the ceiling of the uptrend may not be as low as the previous period during April. Reason being, if I look at this point over here, if I line it up with the latest movement, there is a chance that the ceiling has expanded. Okay, but it's too early to make a change. I just want to keep this for one more week and see what's going to happen, because what's happening right now, especially if we look at the volume today, is less than half of the previous 2 days. So there is a chance that this is a forced breakout, and then the price is going to come back to retest this center line, the blue line over here. Okay, so if it manages to get outside of the channel, we still have to observe, okay, whether this turns into a support line and it turns to another uptrend. Okay, so for PYTH, there's no immediate change or continuation decision point like what we talked about. So last time we talked about when we get closer and closer to May 2nd, which is last week, when we conduct this session, that breakout happened on the very, on the very day we said, okay, that's a decision point. We come in, and then the price continues with a stronger than average movement. Yeah, so there's no such decision point in near term. Okay, it's somewhere when we get closer to early June, in case the price drop back and continue to be suppressed or hammered by the bears above this 6 cents line. How about the big picture then? Here, very aggressive candle, okay? Haven't seen this kind of candle after early February. So let's shrink this a little. It is kind of trying to recover from the deep test that's going on. So the very key is that when the price continues to come up, if it is, the orange key level of 0.087 is the very first heavy barrier that the bulls has to go through, because that's where the panic overstage happens back in June last year. Yeah, we are getting into a new mark for PYTH. So once it gets through this point, we want to see the price to surge to a level close to the 0.191, this blue key level over here, because that's where the automatic rally closed. Okay, that's something we call the sign of strength. A higher than average volume, price retesting the trading range top. There may be subsequent price retracement, to test the lower levels, but that's the very first step that in the Wyckoff method, the very first step that it has to go through during the accumulation cycle before it transits back to the distribution. All right. Remember, you can find my weekly write-up on Substack at Asset Lens. See you in the next video. Thank you.